So on today's show, I have Stephanie Johnston, and she is a lender with Service First Mortgage. And I am so excited to talk with her today because she has a really good knack for helping people get from the gap to the goal, and even recognizing the gap in the first place with how you get from where you are today to being able to buy a home. And we were kind of talking at the start of this, and you said everyone can buy a house and everyone can get there. I help them figure out the gap to the goal. So with that, we're going to have a great conversation today, and we're going to talk about a thing a lot of people don't like talking about, and that's money. So I'm really excited about that. So first, let's kind of go back a little bit and tell us how you even got to lending in the first place.
All right. Well, thank you for having me on. As far as, again, Stephanie Johnston with Service First Mortgage, and into lending, I've been doing this 17 years. I don't like to say that. I can't be that old. It has to be less than that, but it's been that long now. Right out of college, everyone kept saying, hey, go get, do something of sales or all these, because I was an athlete in college, fun fact, swam. And I went into lending more that it was by accident. Didn't know what I wanted to do, like most people do after college. And I found it something that a passion of mine, and something that actually really worked well, that we could help people, that I was giving something that someone needed on a daily basis, and I could create home ownership. And it was so exciting, and kind of stuck through it and said, wait, I accidentally stepped in the perfect industry for me. So every day, thank myself for getting that fashion design degree that didn't know where I was going in my life. It got me into lending. So I'm also a math nerd in my spare time. I think like numbers and all that worked really great for me. So I've been doing that long. Halfway, I started my journey where a lot of lenders do in a bank, just a different lending environment. We can talk a lot of times as to why please don't call your bank or some of those to get loans. Use your local people. Stepped into the local market into lending about 10 years ago now. And some of the reasons I think that when Jennifer brought all this up is some of the stuff on the podcast that spoke to me. I've been there, and I've been in all different places in my life. I've been a single mom with no child support and a 6-month-old, starting my business completely over from scratch, not knowing anyone, and just looking, oh my gosh, who needs a mortgage today? So I've been there and built a team up from there, and had a lot of different successes along the way. I think what's a little different probably for me than most lenders most people are scared to death to call lending. And I have tried so hard of please, please, please. I am not a scary person, nor is anyone on my team. Just call and talk to me. I promise. You can just call and ask a question, even if you're not ready to apply, just call us. And I think that does come from people think if possibly they're not quite ready and they call, they're going to get denied, and no one's going to help them, and it's just no go away. That's absolutely polar opposite of what we believe. I think the earlier you can call to get a plan in place and to do the right things, or what you need to do when you purchase a property or you're getting ready to buy. And that's where I talk a lot, like you said, about gap to goal, is everyone can buy a house. If there is a challenge, what is the challenge and what's the solution to get there? And I do this every day. We help hundreds of homeowners a year. We want to give you that plan instead of you going online to try to find it or to guess, because I think everyone realizes now online might not be right.
Yeah.
I take the wrong steps, or just also have a person that guides you along the way to get there. And then making sure you take those steps to get to where you need to go.
Yeah, I love that, because it's, starting the conversation now, as soon as that little bug, you've got it to be like, maybe I want to buy a house. It makes so much sense to start that now. The problem is we have just grown up where, in social circles, like money is one of the taboo subjects. You just don't talk about it. And then especially among women, we never saw our mothers talk about it. It's something that, and then also, like, I know when I started my process to buy a home, I was embarrassed. I was afraid someone was going to look at me and be like, wait, you're how old and you don't even have this much saved up? Are you kidding me? You think you want to buy a house? Like, even being in the industry, I was afraid of what someone might say when they looked behind the curtain and saw like the real deal. Cause we all want everybody to think this one thing about us, but if you really knew what was going on in my checking account, I would be embarrassed. And so it was really hard to take that first step to have that conversation, but I'm glad I did. And I love that y'all's approach is very much like that. Like, hey, let's start now. It doesn't matter where you are. Let's just start and figure out how we get to the goal and make a plan. And that's so much of what this is about, and why I wanted to talk with you is because it's hard to make a plan if you don't even know what you need to do to get there. And so, but first and foremost, one of the, I would be remiss if I had you on the call and didn't ask you the big question that a lot of people are asking right now, as far as looking as being a potential buyer. If you were looking at any of the news right now, it's like, oh, interest rates are so high, and all this stuff about, oh, it's a tough market. Is now a bad time to buy real estate?
No, it's a good time. And I think that as far as number one, if you go back, remember I said 17 years in this. So remember, I started before the crash. Like I've seen all different markets, and I would personally buy a house right now, if that tells you something. I would tell my mom to buy a house. So it's not like, oh, I'm trying to sell people loans. No, I truly think it's a good time. And most people say, well, I don't understand that. Why? And so if you do look back in any type of, I hate to use the word recession, but any type of recessionary period or not as good economic period, which we're not really in, housing actually does well. The time that we remember is the housing crash, which is a very different, only time in history that has happened where real estate did what it did. Every other time economically, houses have actually gone up in value during recessions, number one. A lot of people say, okay, well, I'm waiting on rates to come back down. I want to wait for that. We truly believe, and we've seen it multiple times, if rates drop, you're going to pay more for your house. So buying now, which rates actually have dipped a little bit, they're at a much lower, a better point than we were even just a couple of weeks ago. But when we see these small dips, I can see the buyer activity increase just with small dips. So imagine if we dropped back down to the fours, what would happen? We'd have a lot of people coming in. You would go back to not having the ability to pick which house you wanted. We'd have multiple offers on things, which we do a little bit now, but back to where we were before, we wouldn't have that. But the one thing that always sticks with me when you talk about, when people say, well, houses went up so much, they're going to drop in value. So all the way back to 2010, we've been tracking this. Household formations have been higher than the number of houses being built. So if you look at inventory, which this is Jennifer can go through a lot more of this with you guys, but in general, my 2 cents on it, to hear it from both sides, is if I have more household being formed and more people that want to buy houses than houses being constructed, I have a supply and demand problem, and inventory is actually at an all-time low. And until we correct that, which cannot be corrected overnight, there's no way houses can fall if I don't have more than I need. And how would we fix that if for 13 years we've been negative? Yeah. So I don't know if that gives a little insight on kind of and we can go on a whole, I can talk about an hour as far as on it actually, as to why, like mathematically. And to touch on that, we have products that we've developed in this market that help for that. So we have products where you can get temporarily a lower interest rate to help with that higher payment. We have options where we cover all the, most all the costs to get a lower rate when rates drop. We have all of these tools that can kind of offset the rates being a little bit higher than they have been over the last couple of years and still have the payment affordable. Okay. So let's say, all right, we get it. It's a good time to buy a house. What is that first thing I should do when I've just got that little bitty inkling that, I maybe should do this for myself? What should I do next? You should talk to me and my team. And what are you going to tell me when I make that phone call? Exactly. Well, I think the most people, of course, it's a mirroring of the real estate side and the lending side. Most people say, well, I want to go look at a house, which is great. Go see what works and get your budget and kind of get those things in line with what you think you need to spend to get a property. But our side is actually so important to that, because we're going to get you, number one, ready to buy a house. So what if you go out and you're ready today, but you find the house you want to buy? Yes, we can go backwards, but to have financing lined up, to know your budget, what monthly payment you want to be, how much money that you need for out-of-pocket expense, do we need to do anything with credit maximization, which we'll talk about here in a minute? All of these things, if I have time to do that, it sets you up for a much better home buying experience. What if you looked at a house that you could actually qualify for more than you thought? You could go
Mhm.
higher. What if you then, or the opposite, you looked at a house and maybe it was, you didn't love that payment, but you love the house. Well, now we're like, what do we do? Making sure that we define your goals and get it ready. So as far as more of the tangible things, what we do, we're going to grab your information. So I'm going to look at, how much you make, what do we have in the bank currently? We're basically rolling back that curtain and looking at everything. We are going to pull in credit. A lot of people are concerned about that. We do not have to give you a credit inquiry always to look at credit, but we need to look at the current reality of the situation. And if there is anything, like I say, goal to gap, that maybe there's a, price point monthly versus the house, or you have X saved and maybe we have Y saved, we can go through all the creative options to get you there. If you need any credit work, if there's, any of those pieces, when we say goal to gap, we're never going to tell someone just buy, get off my phone.
Mhm.
We're going to say, this is what you can do now, and here's how I get you, and actually give you a written plan.
Well, and that's one thing I like too about your approach is because like I may know I have a really good credit score, but what I don't realize is that just increasing my credit score a little bit more, I'm actually going to bring my payment down. So maybe I could afford this payment over here, but how much better would it be if I saved more every month and lowered that payment just because I did a little extra work on the front end to bring my credit score up? So I could get a lower interest rate. So it's little things like that, where that's why I love what you guys do, is coming in and looking at the whole picture, not just saying, hey, yeah, I'll run your credit. Tell me your bank, what your W-2 is. And here, I'll shoot out a number for you. It's like, well, I could get you this, but if you wanted to maximize everything, you could pay less and just do a little bit over here and set yourself up for an even better position.
And I think on that note, there's, I think sometimes I was like, why are you asking so many questions? Because I ask a lot of questions, but I think that there's a lot, let's go online and fill something out. Oh, let's like barely speak to the loan officer. Let's get a rookie loan officer that's been doing this 6 months. I'm gonna tell you right now, lending is not created equal. Let's just say when you pick up a phone and you could call an internet lender and just say, hey, you don't know who's on the other end of that line. They could be doing this to their second loan. I'm like, do you want to trust this person for your biggest financial purchase? Please, please, please don't do that. So I like to try to get someone's full financial picture. Like, I'm asking every penny you have in the bank, all the income sources. Is there anything that I'm missing, that maybe there's an extra income source somewhere else? Maybe someone else lives with you. Maybe you're going to get married. Maybe there's, mom living there. Maybe there's a side business, whatever, to know your full financial picture. And some people even say, like, well, why are you asking me about the extra assets? I'm not using them to buy the house. Well, correct, but I don't want to leave you with no money in the bank too. So I want to know everything to then say, okay, here's the reality and here's all my pieces. How do I make these fit in? And some of those little things can change your loan options. And like you talked about when I speak, what is credit maximization? What I keep talking about. So in
Big buzzword.
yes, in lending, they're, especially recently, they've changed a lot of the guidelines and pricing for loans, that someone with a 720 versus someone with a 780 gets a very different interest rate, very different payment. And so, or maybe someone between a 660 and a 750, whatever the score is. So what we do on every credit report is look, is there anything that you can do to get the score higher? And then I'll really work up, here's your current score, and here's your numbers as if I fix X, whatever X may be, or do this little deal. And sometimes it's as simple as paying a credit card or something, and show the mathematical difference. And sometimes it's hundreds of dollars a month. When someone qualified as is, they didn't have to do anything, but they do those small little things. Well, one, it saves money, or two, you can go to a higher price point and buy more house for the same amount of money. Why would we not want to do that? And if I have time to do that, like I say, is the key. That's why I say the earlier I start, those things can help, versus, again, I'll help you if you call on a weekend and you have found a house already. But if I have the time, it just allows them more time to do some of those items.
And it does not cost me anything for you to do all this work for me, right? You're doing this all on the front end for free.
Exactly.
Okay.
There's no like charge. Everyone's like, what are you gonna, no, don't charge anything. So it's just, we believe in helping everyone and giving everyone the keys to get there, and you know, how we get to this process, and obviously, you know, helping you actually obtain the mortgage at the end of the day, but we don't charge anything, you know, for advice and direction in any way. So.
Because I think too, like you start Googling, oh, credit repair, credit help, and there's fees associated with that and everything. But you guys are able to look at the big picture and then offer those suggestions. Because one thing you and I were talking about before we started this call was, because sometimes one thing people will do is they'll just go ahead and pull a credit report on, you know, do the My Free Credit Report or whatever it is, and they'll get a number and they'll be like, oh, I'll Google some ways to improve my credit and I'll do this versus that. But my understanding is there's actually some things that are better to do in others. And so like one of the questions I had for you is what's more important, saving up for a down payment or fixing my credit score? And I'm kind of asking you two questions, but can you touch on both those?
Well, and I think that's so, number one, I need everyone to like hear this, that whatever consumer credit score you pull is not a mortgage credit score. So number one, the scores are different. So please don't do this, but if you pulled an auto loan, a consumer report, a credit card, and a mortgage all on the same day, the scores would all be different. Makes no sense, but they rate different things as far as more important. So, you know, there's different weighting systems in an actual credit report score, and they're all a little bit different between those avenues because the risk to someone paying back a credit card versus a mortgage is, things are different, right? So number one, that. Now they should go in the same realm, that if you're monitoring your consumer score and it's rising, well, so should your mortgage score, but know that it's different, and sometimes higher and sometimes lower. You just never know. I always say, please, as we know, Google's great, but Google's not always right. And it's not right necessarily for your situation. So I still say, please don't do credit work until we look at it, because I might tell you to put your money somewhere else. Sometimes paying a collection can actually lower your credit score. It depends on what it is. There's certain types of collections you can actually, by federal law now, get removed from credit with payment, or some that are going to stop reporting here in about a week. So there's all of those nuances that we know and deal with every day that I would so much more have you talk to me, and then does it make sense? Because correct, I've got to balance that with, if you spent all the money on credit, that could be right for one person, but for another, I might say, we really should keep that because I need to be in a house by a certain timeline and I need you to use that for, you know, cash to close.
Okay, so there's no one size fits all, down payment or credit. It is all circumstantial.
Right. And that's where I'd much rather someone have the money in their account and have the ability to do one of the two and have us be able to talk about it, versus them have already done it. And then I can't go get, what are we gonna do? Hey, go get that money back. We can't.
Yeah.
So I always say, please, please, please let us help you with that.
Okay, well, because that was another question I had for you, is what are some of the things I can do to improve my credit score? But it sounds like that's not a blanket answer. Like it's all going to depend.
And I mean, in your basic stuff, of course, you know, making sure you pay all your bills on time. I know that sounds, you know, elementary, but a missed payment is a huge, huge deal. So never have those. Generally speaking, you know, changing your credit card utilization. Anytime you have maxed out credit cards, that can lower, but that's something, again, if it's a lot of money, I need to talk about where we're going to spend it. One tip I think a lot of people don't realize is, generally speaking, in general, the credit card companies are going to have a certain day that they're going to take a snapshot of your credit card and report it. It's generally the statement date. So let's say that you have a credit card, especially some smaller ones, if someone has like a $500 credit card or something, and they charge it up and they pay it. A lot of people think if they charge it to a high amount and pay it, that's good credit. Potentially, but it depends on when that snapshot is. So paying the credit card bills before they're actually due, so that the statement closes at a lower balance, is actually better. So versus if you close, if I have a $500 credit card and a $500 limit, like I owe 500 and it reports to credit, I actually you lower your score.
Because you look maxed out.
Take that and I'm under, it depends on your credit profile. A lot of people say 30, but you actually even get it better if you're under 10%. So paying it down to a very little amount and having that report to credit every single month. And it's a weird thing because you're paying a bill before it's due. but you're intentionally looking at like, I want to pay this to get X balance reported to credit. There's little things like that I hate to use the word manipulating credit, but it's what it is that we tell people to strategically do.
You're just working the system.
Right.
So.
But if you're gonna pay it anyways, just pay it, literally paying when you pay the bill is going to change your credit score. As crazy as that is. Some of that is, again, we can help you with all of those things, but if you're just looking, some of those also not having credit cards, as weird as that is, can lower your score. But again, if we can start with your report, we will tell you exactly what to do. But there's all these little things, as you hear me saying, that might be free or might just be reworking how you're paying your bills that will boost your score. That's not difficult or costly.
And that's something that's really helpful to have just another set of eyes to look at, because that's one of the questions I had for you is like, okay, let's, say I give you a call and I'm like, oh, I want to buy a house in 2 months. And you look at everything and you're like, hey, maybe it would be better if you waited to do it for 4 months. And here's why. And so my understanding is that you're going to give me those action steps and say, okay, do A, B, and C. And then let's regroup. And then will you pull everything again, or how does that work?
So, correct. We want to get everything together. And again, it's not just credit. You got to look at all it's income and how much you qualify for. It's potentially some people, it's a timing thing. Maybe they just opened a business or they just started a different, they just started getting commission income or something. Sometimes it's those. It's also matching up monthly payments to purchase price. And it's matching up how much money you need to close. And we can talk about that on, a bit here too, on just, there's all different products, right? So we're going to give you, anytime we run numbers, we're going to give you an actual like dashboard where it's got different loan options. And it says, this is how much you need to close. This is how much your payment. Here's the variables, what these look like. So then what to do, to get there, or again, you're ready to go today. And I do think that that's important also on that kind of a side note is timing with your leases. So a lot of people think, okay, I got to be out by this certain date. Well, then we need to see if that's realistic on my side and your side with the home search. And the earlier we can kind of do that. And then please also make sure you talk to us before re-signing leases, sometimes month to month, even if it's more like you might not need a whole year. You might just be able to need 1 more month or something to get to a home. So I think I keep repeating the same thing, that we help versus like making some of those big decisions that can be financially, change the course of things. And we can give timelines of what you got to do, what you need to do to get there. You just need to raise their hand and say, this is what I want to do. And this is what I'm get to.
So I have a kind of a wild card question for you. So for those who don't know, I like to send a list of questions beforehand. So there's kind of a format and what we're going to talk about. And then as we start talking, things will just pop into my head. And so one of the things, because I know it is hard to reveal everything to you. So can you think of anything in your history where someone just kind of kept it to the side thinking, oh, it's not going to be a big deal. And then it showed up in the middle of the process and you were like, how did you not tell me this? And it became a big deal.
Yeah. So we're going to find out everything. We're kind of big brother. And the thing I think people like, I've seen everything, like nothing shocks me. It's fine. Like it's okay not to be embarrassed. Like it doesn't matter. I can help in any situation. And you just have to say, I think I'm going to do this, or this is going to happen. I think a lot of the stuff that does pop up is like, changing of jobs or opening credit before closing. Like, please don't go buy all your furniture right before closing and have that come up, because we're going to know about it. We're going to bring it to current. Wait till I give you the keys.
And some of the things that I've seen too is like the big purchases, like going ahead and like, oh, cool, I got approved and everything. So I'm going to go ahead and run to the furniture store and get everything. So it all arrives on moving day and I'm done. And it's like, that's the worst.
Wait, please don't buy cars. Please don't buy a car right before you're about to purchase a house too. Because that's my big ones. Like, number one, some of the car companies, and I get it, they might pull your credit 20 times and then I'm after that, and then it could drop your score. So please don't do that. And then the car payments, like that can directly affect how much you're going to qualify for and what the numbers look like. So please, if you're thinking of doing one, do house before car. just manage with what you got for a little bit longer, especially with cars prices where they are. Please don't correct. Big deposits are another one we see. So sometimes oh, I got that money. Why do you need to know where it came from? We look at 2-month statements, and anytime I see a large deposit, I need to verify where it came from. And the logic on that is underwriters don't want to maybe see that it came from you borrowed it. You went and got an unsecured credit card. And there are places you can borrow money. So you can use 401ks and houses and secure things to borrow, but tell me so I can tell you if it's okay or not. Or even timing it. Sometimes you can get maybe you have a deposit in and you, if you're transparent, you say it was all cash. I'm gonna tell you how to get it in your bank account, because we can't, if it's cash, well, I don't know where it came from your house, right? I don't know. I can't trace it. Talk to us about that. So then we can say, all right, do this, or deposit it here, or don't do this, so that we can fix it, versus if someone just says, I'm going to go throw this in here and be fine. And we've seen some really big cash deposits. I would be scared if I had, 40 grand in my house in cash, but I've seen that before.
Wow.
So just transparency and will help. And nothing shocks us.
And that's nice, because I think, again, it's kind of the same theme throughout this particular episode, is just the hesitancy of wanting to just bear everything because we feel like there might be judgment or whatever. And it is nice, especially with someone like you who's been in the industry for as long as you have, but not too long. You're still wonderfully young. But to have some, tenure to be able to say, hey, look, this is it, everything's fixable, everything's figure outable. And it's just, what's the plan from here? And so I think that's something, if there's anything I want someone to take away with this particular episode, it's okay. You're starting, I commend you for that, to even start the process, to have that conversation. Because I know even just that first phone call can be really tough to have.
Yeah, and there's no judgment. We want to help people. And again, that is our absolute goal, is how do we get you there? So there is no, oh, my credit's too low, or I have this, or something's happened. I mean, if you don't know what to do, then how are you going to get there? It's one of those things. So
some nuts and bolts to this. So I'm going to give you a phone call and reach out to you to start the process. What are some of the first things that I should have ready to go, with some of those first questions you're going to ask me, to even assess, okay, what's the high level picture? What do you need from me?
So most everything to start is verbal. So we, either on the phone or online, it's super easy, 15 minutes, we can get your information. It's not some huge, overbearing process. So, where you, address, birth date, social, where you live, do you rent or pay, live rent free? How much do you have in the bank? Your employment history. So we're going to look at 2 years employment with where you work and, how are you paid itself? And we're going to go through that. Then documentation is something that we do suggest that it's important to, turn in once we get to that point. And there's going to be times in which I have to have that documentation to qualify. So some examples would be if someone's, self-employed, if there is, commission income, something variable, I'm going to want to look at your paycheck stubs and year-end paycheck stubs to average that. There's certain lengths of time you need to have those variable income sources. And even if you're not to those, or maybe you just started a business, again, still call us early, because we can tell you what to do. Complete side note on that. People that are self-employed, we like to look at tax returns before they were filed if you're concerned about income. So right now, if let's say someone's about to file their 2022 returns, I actually want them to call me before they do that. It seems opposite, because someone's like, well, I got to have those. You're going to deny me if I don't have the income docs. We look at that, we get the draft of the CPA, and we can say, well, that would provide you with this amount of a qualification. Because then again, you can pivot accordingly with the CPA. We get bank statements, but up front, you can just give us verbal. I have this much in the account. I think I have this much in my retirement. I have this much in stocks. And then we'll have you pull all of those statements. We generally get 2 months of those statements to fill in the gaps. A lot of people know off the top of their head. Then again, we get that checklist.
Okay. And I think we could probably do a whole nother episode on this, and we may, but One of the things too is some people are not aware of just how many lending options there are. Some people think you have to have 20% in cash. Some people maybe think it's only 3.5. And so can you speak, without going into detail of all the different programs that are out there, can you kind of speak to that's one thing to consider too, is you may think, oh, I don't have 20% saved up, there's no way. What would you say to that?
So there's a wide spectrum of product mix depending on, again, everyone's situation. So I do pride myself personally with all of the years and all of I want to make everything work. Also comes with that, I learn every product, like every product in the industry I know about and we pretty much offer. Like I tried to find a product the other day we didn't offer and I couldn't find one. So as far as, let's speak to down payment. If that's, I don't have a lot saved, traditionally people think 20% because that's what, back in the day you had to have. Absolutely not the case. There's products with 3 and 3.5% down that we do all the time. There's also down payment assistance grants that can cover that down payment. So we have clients even today that will get to the closing table with $0, like nothing. And so you can use, the seller can help cover closing costs if they're willing to. They can combine with those. There's rural development loans where if the house is, a rural and you meet certain requirements, loan is 100% financing to start. Veterans get 100% financing. So there's all types of products where you don't need as much as you think. And even if you're in that boat and you would need something, let's say the seller wouldn't cover cost, we'll show you what that something is. Like what's the dollars and cents that you would need to buy X purchase price home. On the income front, there's a lot of developments that have come about in that realm. There's, obviously your traditional loans. We have loans where you only need 1 year of self-employment versus 2. So that can sometimes solve a goal. There's what's called bank statement loans, where I actually look at your deposits to calculate your income and I don't even get tax returns. Kind of crazy. It's out there. We do land loans. We do construction loans. If you're going to buy a house with HGTV, we get a lot of questions of, I want to take my this ugly house and I want to make it beautiful. I can tell you it doesn't magically happen on the financing side. There's actually something you have to do in the back, but we have loans that actually roll that in. So I actually think it's amazing when people will take that journey, and I know it's not for everybody, and take that ugly duckling and add all that reno. We can finance it. So we have products even for just the ugly duckling house itself. So I think, there's so much, like you said, in the lending world, that we can tailor them specifically for a client.
Well, I love that. Well, Stephanie, I feel like you have covered so much in this little talk, and we are going to have you back because I know there's still so much more you could talk about that would help this audience. But is there anything else as far as, the initial conversation with lenders and talking with you and, getting the courage to make that phone call, anything that we've talked about today that you would like to add as kind of like your parting words for the audience?
I think it's just summarizing that, again, we're here to help. We're here to help a part of your journey and get you there and meet you wherever that may be, ready tomorrow or buy in 2 years. And we're not scary, promise. See, that's why you can hear me and see I'm not a scary person, right? Just like a normal person over here. And that I would say also lenders are not, I think lending institutions and lenders are definitely not created equal in terms of the skill set, product mix, and their attitude in which they help clients. And so we are not the stereotypical lender that you would think would just, okay, again, the hang up, it doesn't work and hang up. That is not us. So just reach out, call, text, email if you have any questions, and then we're just here to help.
Well, thank you so much again. Have a wonderful rest of your day.
Great. Thanks. You too.
Well, friends, that is the show for today. If you liked what you heard, please be sure to rate and subscribe to this channel and share it with your friends. The growth of this channel is critical to giving you quality interviews like this to help women like you set yourselves up for financial success. And if you want to start the process of your home buying journey, join one of our growth groups. Growth groups meet virtually, and they're designed to keep you encouraged through this process and provide you with tips and resources to get you positioned to buy a home.
You can sign up for one today at homebuyingforwomen.com/growth. In addition, those who like to wear suits in the office tell me that I need to let you know that I am not a financial advisor, CPA, tax advisor, or anyone that is tied to your individual finances, nor are any of my guests unless otherwise specified. The content provided by our platform is for informational purposes only and are expressions of opinion. In order to make the best financial decision for your situation, you should seek advice from a seasoned CPA, financial or investment advisor, lender, or realtor. And if you're looking for a seasoned lender or realtor, we can help you with that. Just go to homebuyingforwomen.com/guide and answer a few questions for us to get you connected. Well, I will see you in the next episode. Have a wonderful day. Bye now.